Breaking news now from the Bank of Canada. The bank has just announced that they are cutting the interest rate by 50 basis points. Analysts had been predicting that. The bank has now cut rates 4 times in a row. The latest data shows the economy has slowed, with inflation down to 1.6%. With his reaction is Pedro Antunes. He's the chief economist with the Conference Board of Canada. Pedro, good morning. Good to see you. Thanks for being with us to react to this breaking news. What do you make? Are you surprised?
Well, I guess we weren't surprised. Earlier on, perhaps a couple of months ago, we weren't expecting quite such a drastic rate cut. But of course, we saw inflation fall to 1.6% in the September reading. It was very good news. And inflation globally has been coming down. And as you mentioned, the economy is weakening. We're seeing essentially a flat economic performance over the last few months. And employment, which had been essentially flat as well over the last few months, it picked up a little bit in the latest reading, but still the economy seems a lot weaker than what the Bank of Canada was certainly projecting in its last report. So yeah, 50 basis points, good news for households.
Good news. So what does this mean for Canada's inflation rate?
Well, I think there's still some concern around some segments of inflation. Certainly we're still seeing housing inflation being quite strong, but of course, as interest rates come down, this will help. In general, I think the only underlying pressure that continues probably to concern the Bank of Canada is wage inflation, which doesn't show up directly in the CPI, but certainly has an impact indirectly. And it's really what the Bank of Canada should be focused on. And wage inflation is still running hot, but I think like the bank is likely thinking like we do, that this is a catching up of wages to the past 2 years of very high inflation. Inflation expectations are starting to settle for both households and businesses. So that, I think, means good news on that front as well.
At 10:30, we are expected to hear from Tiff Macklem. What are you listening for, Pedro?
Well, I think we're certainly going to be paying attention to what their outlook is for economic growth. There's a couple of key pieces that are working themselves into the numbers, and in fact, in the announcement just this morning, in the media release, the bank talked about they're expecting consumer spending on a per-person basis to start increasing. And this is really important because, as you know, the policy stance from the federal government is now that we're going to reduce immigration, reduce the stock of non-permanent residents. So that has implications. As we lower population growth, we need to see a pickup in consumer spending per household so that the economy doesn't fall into a steeper slowdown than we would want to see.
All right, we'll, of course, be listening for all of that coming up in our next hour when Tiff Macklem speaks with reporters at 10:30 Eastern. Pedro Antunes is the chief economist with the Conference Board of Canada. We appreciate your time and analysis this morning.